Everyone, welcome to Thursday, where of course we do a share and review. Just before we jump across, though, I made mention on Tuesday that I'm more than happy to run a course on how to load stop losses, or at least how I load stop losses, if it will help you in your investing journey, and obviously protecting capital, which is very important. So let me know in the comments if this is something of interest to you. Let me know also a suitable day of the week that's best for you and a rough time, and we will go with the majority and look at running a really simple course on it, and then you can get to ask me any questions and things as well, because obviously I want to help you protect your capital and use a methodology that is really good at taking you out of the market really with no emotion. So it means that you don't have to try and pick where to exit a share. Really important, obviously, in times of volatility, but also important when markets start rising. There is research showing that people have a greater fear when the markets are trending up than what they do when markets are trending down, which really surprises me, because obviously you can potentially earn more when the markets are going up than what you can when the market's going down. To me, when the markets are going down, we want to naturally protect our capital. So just reach out, let me know, and I'm happy to look at doing something like that. Now, moving on to share and review, today we're going to take a look at Mainfreight. It's been a request. Just remember, though, like always, this is for educational purposes only. I haven't taken anyone's personal circumstances into account. If you're looking for that, though, you do need to go and have a chat to your own financial advisor. Let's take a look at Mainfreight. Right, as you can see, I've got Mainfreight up here on the screen, and I'll just zoom in. This share has really, it's been an interesting one, and the fact that I know a lot of share brokers really love Mainfreight. They talk highly about it, really sing its song. However, if I just go back out, you can see, to me, it's really had a downward trajectory since about August 2021. You've had the odd rebound, which is what I refer to as the dead cat bounce, because if you drop anything from a height, you're going to have a bounce, but those bounces are going to get lower, and that's exactly what you're seeing here with Mainfreight. Through this period here, which was around sort of June 2023 through to July 2024, we did see a little bit of an upswing. But then since then, we've been having this downward trajectory again. And last week, whilst it was a positive week, it's very negligible. In fact, it opened at $58.89 and closed only 10 cents higher. So not a lot happening. Now, how can you actually tell if a share is in an upward trend or exactly what's happening? This is where we can use the moving averages. So I'll just grab that. Now, this time, I'm going to put on a 200. If I leave it as a simple moving average, you can see here, so it's a slow moving average. It's over the last 200 weeks, and you can see that the share is trading below that. It's arced down. So to me, this share is in a downward trend. Let's go and just change that moving average, and let's make it an exponential. What an exponential does is it puts more emphasis on the latter performance of the share rather than averaging it out over the whole time frame. And same thing really, it's almost flatlined, got a little bit of an arc to it, but the big thing is this share, Mainfreight, is trading below that 200 period moving average. So that's a reason as well I would want to stay out. The 200 period moving average is a great moving average to really give you an idea as to the long-term overall trend of a share. And Mainfreight is one that's down. I'm just going to change this moving average now, and I'm going to make it a 30, which is my normal one. And you can see here that Mainfreight is trading below that 30-week moving average. So I would definitely want to be staying out of it. We will also put on the 15-week moving average, and that just gives us an idea as to exactly what is happening with it, a little bit more clarity if you like. Now, if I zoom in, the 15-week moving average, you can see crossed here of that week, beginning of February this year, and the share is trading below both of those. So when that moving average cross, that's what we refer to as a dead cross. And the reason we refer to it as a dead cross is the fact that anything can happen. It's a negative sign, it's a downward sign. So for Mainfreight, we would want to see those moving averages cross to the upside. So we would want to see that 15-week moving average, that blue one, cross up through the 30. That's definitely something that we would want to see. Let's go and have a look at the 1 year chart, simply because it brings these candles up to daily. And look at this. If I zoom in, you can see that that dead cross happened on the weekly chart at around the beginning of February this year, and it's definitely been just in free fall. We've had a couple of positive days last week. Tuesday, Wednesday, however, was quite a big sell-off. In fact, if you look down here at the volume on Tuesday, you can see that there was a lot of volume happening on that particular share, $97.7 thousand worth of shares traded. Okay, and then obviously, if you go back to Monday as well, there was $22,000 worth of shares traded. So there's quite a bit of volume there. That is why I really wouldn't want to be owning Mainfreight at the moment, because it's in that downward trajectory. Now, another thing you can do, and I have spoken of this before, I'll take these moving averages off. We can make a comparison as to the actual indices. And there we go. You can see that over the same 5-year period, this blue line indicates the New Zealand indices, which is the main board, and that's up around 3.5% over the last 5 years. You can see over the last 5 years, Mainfreight, however, is down about 19.5%. Okay, so again, that is another tool that you can use to see as to where a share is trading, if it's potentially a good investment or not. If it's trading above the main indices, then it is something that I will then do further research on to possibly consider. Because if it's above the main board, then it means that it is driving that market up, driving the New Zealand main board up, which is what we want. At the moment, it's obviously a detractor from it. Let's take that comparison off. Now, another comparison I'm going to put on is actually Freightways. Now, the reason I've put Freightways on is purely because it's in the same category. It's also a transportation company. Freightways is a company that I have owned on and off over the last few years and have certainly had quite a bit of success with it. Now, you can see here that Freightways is trading above Mainfreight. It too's had a big sell-off of late. I don't currently own Freightways. In fact, it was one I was recently sold out of using a stop loss when the market started to fall. But you can see here that that is actually performing a lot stronger than Mainfreight, which is really interesting because I do have friends that are share brokers, and I know they talk a lot about Mainfreight and really sing its praises. However, when I make these comparisons on the chart, you can see Freightways has actually been a better performer. At this stage, I wouldn't even be jumping into Freightways simply because it's gone off from its 70-day high. I want to see a share making a new 70-day high when I'm entering, and I want it to be on an upswing. Whether that is about to happen, who knows, because that's only a line chart. So anyway, I'll stop sharing. I really hope that's helped. It's been great doing a share and review. Happy to do any other share and review if you would like me to take a look at anything that you may have in your portfolio that you're uncertain about. Just again, drop that in the comments, and definitely let me know about those trailing stop losses, because they can be used in any market. It's just the methodology that is the same. It's teaching you how to do that. So I look forward to hearing from you soon. So anyway, until next week, take care.